Guy, a pleasure to have you join us on Parliament West Africa.
Thank you, Christy.
So we're looking at 44 companies in all, 14 of them making efforts to raise capital. And this brings, of course, some conversations for us to explore before we get into whether or not capital is the all-encompassing solution for Nigeria's insurance sector. First of all, how experienced are these 14 companies in capital raising? And how many investors, or how familiar would you say investors are with Nigeria's insurance terrain?
So those are two very good points to start off with. As you said, 14, we know of 14 companies of the 44 that submitted their capital raising plans to the regulator NICOM last August, and we know of 14 that are in the capital raising process. Of the 82 billion naira that they set out to raise, we think only about 23 billion has been raised so far, and so there's some way for them to go. I think you've hit the issue, which is that these companies have not done much capital raising for a long time. The last big insurance reform was back in 2007, and the industry as a whole has been very stable in its structure. Completely unlike banks, by the way. Banks merge and they take over each other the whole time, and we've seen Access Bank take over Diamond last year. We've seen UBA raise capital in 2015, and all sorts of things happen. So
I mean, the banks in Nigeria have made mergers look so easy since 2014.
Precisely.
Or 2004 consolidation.
Yeah.
Right.
But that hasn't happened in the insurance industry. I think that's one reason why the Nigerian Stock Exchange had a conference in December of last year to try and get investors more familiar with the insurance industry and with getting the companies themselves more familiar with the capital markets.
So when we talk about raising capital now, I think it's important for us to take a step back and look into the fact that when we look at Nigeria's insurance sector, it can at best be described, or it has been at best described by analysts, maybe like yourself, if I could refer to you, as not doing so well in the past 10 years. Not just looking at it nominally, you could say it's faring well, but when you now factor in inflationary realities and pressures in the past 10 years, you can't really say it's done so well.
Precisely. So there's nominal growth in the gross premiums of the insurance industry. The only problem is when you adjust those for inflation, the actual compound annual growth rate over 10 years is about 1.4%. And in dollar terms, it's about 1 point something percent. So it's actually a very low growth industry. Within that, life premiums grew quite a lot against the general insurance industry. But the overall picture is basically flat, yeah.
Low growth industry, you described Nigeria's insurance industry as. Can we take a moment to appreciate the difficulties or the challenges that are actually drawing back the sector?
Sure. I think, if you look at the sector, it is very small relative to the economy. So the sector is about 0.3% of GDP. That would compare with something like Kenya at 2.4%, India at about 3.7%. It's very, very small. The reason it doesn't grow, in my opinion, is we haven't seen as much consolidation as we should have done. So I think the regulators' reforms are spot on in that regard. But also I think we've seen inhibitions on the development of bank assurance, because banks are the obvious way to distribute the product, and we've seen inhibitions on the development of telco insurance, which is another brilliant way to distribute the insurance product.
If we haven't been seeing so much progress in terms of latching onto mergers as a strategy for raising capital, what other options do you reckon might be available to this insurance companies?
Well, you have to say some people are very optimistic about the industry. You've got one private equity group coming in with a major investment at the moment. You've got a microfinance bank, or the owners of a microfinance bank, launching a micro insurer, and you also have a development finance institution from abroad making a major investment here. So there are people who really believe the industry will take off. It's just a matter of whether after the recapitalization process has taken place, and that's now postponed to December of this year, whether the dialogue with the various regulators, because there's not just one regulator, whether that dialogue is going to improve.
So talking regulators now, not one regulator like you mentioned, but the foremost regulator that has been in the talks over the last 1 year now has been the NICOM.
Yeah.
And the foremost reforms that they are pushing, of course, as a solution to, as one of the many solutions to Nigeria's insurance sector, is the recapitalization exercise.
Correct.
Now, how would you describe the relationship between that regulator and the sector itself? Or should I take it a step further by saying what collaborations could the sector further explore as a way of resuscitating or making the sector better? So,
NICOM, as I said, is doing its job, which is to recapitalize the industry, and that's a welcome development. So you could argue that those reforms have been pushed through a bit too fast. They had a deadline of June of this year. That's been pushed on to December of this year for the recapitalization and mergers. So it's doing its job. When you look at the industry, there are other players in there. Bancassurance, you have to go through the CBN, the Central Bank of Nigeria, to get that sorted out. Telcos, you have to go through the NCC. So, there are many regulators who need to be involved if this whole thing is going to take off.
If you say that maybe, quote unquote, now the regulators are pushing too fast from June deadline, now there's a December deadline, I'm thinking too fast or too slow, or is the deadline even feasible in the first place, given the strategies that the active players in the industry are latching onto?
So it goes back to what we sort of first were talking about, which is that it's a stable industry. It's changed very little. I also, when you go and see these companies, it's a courteous and gentlemanly industry. These are extremely nice people. They're very open. They're not really used to the cut and thrust of mergers and acquisitions, capital raising, raising money from the stock market, and all those things. So I think that's the challenge. If you're going out to an industry that hasn't changed much in 10 years and trying to get the capital raised.
But suddenly it's an industry, like you said, gentlemanly on one hand, which has suddenly found itself in an entirely different situation that demands absolutely different strategies if they are to survive.
I agree. And that's why, if you look at the number of mergers taking place among the 59 companies that we have in this country, we only know 6 that are taking place. Well, that's not a whole lot, So the implication is that you will either merge, but very few people are doing that, or you'll raise fresh capital. And of course, as we said, we're not quite sure how all those capital raising exercises are going. We assume that they will be ongoing for the first 6 months of the year. Many of them will succeed, and then on to the second half of the year. But you're also thinking that a certain number of insurance companies will drop out of the business.
So let's look at the potential for growth within this sector. Given the current recapitalization exercise, what growth opportunities are we looking at?
Well, look, if we look across at economies that look quite a lot like ours, Ghana, for example, gross premiums of that industry are growing at around 7% per annum in dollars and have done for several years now. So that's a good growth rate. You would certainly invest in an industry that was growing that fast. One of the reasons for that is that they did very well in microinsurance. So microinsurance is very interesting because it reaches a lot of people and it educates them about insurance at the same time. So it's building that sort of level of trust in the insurance industry and what it does. And so that's why Ghana has done well. That's not the only path to growth. I mean, there are many other paths to growth that have been found, and worked in Southeast Asia and in India, as I said before. But that's one path.
So are current realities within Nigeria's insurance sector making investors interested?
Well, the thing is this. If you take the insurance sector over the past few years, the return on capital has been about 7 to 8%, which is not a whole lot. If you then say, we're going to make you raise the capital, so the capital of a general insurer goes up from 3 billion to 10 billion, you're then saying we're increasing the capital, so the return on the capital then has to come down. Now, clearly, once people have raised the capital, they might turn around and say, well, actually, we've done that, but we need an avenue for growth. And that's why I think we're going to see more of a sort of constructive dialogue with the regulators, plural, towards the end of the year.
Guy, that sounds like a nice place to leave the conversation for now. Many thanks to you for coming on the show.
My pleasure, Christy.
Guy Czartoryski is the head of research at Coronation Merchant Bank.